very recently I was an advisor to the Dubai government on their smart city initiative. And then I was an advisor to the city of Neom on their digital initiative. So I basically was the one who was writing the digital master plan for Neom City. A lot of focus on smart cities and cognitive cities. What makes something smart and what is cognitive actually. So there's a lot of work that I've done in that space. I started with Dubai government back in 2016, and one of the key tasks that I had while I was leading the Dubai's blockchain strategy, one of the key tasks that I had, as I was mentioning earlier, was to actually look at what are the missing links. So one of the things which I saw was when you talk about smart living, smart life, so what is it that makes something smart? Anyone on that? Any takers? No one. So basically, when I have a feedback loop on something, that is it that makes something smart. So if it's a city, can a city react to the feedback that it is getting? That feedback could be coming from city sensors to optimize the traffic. That could be coming from the people or the constituents so that I change the policies accordingly. But that's how I define a smart city. I define a cognitive city as something which basically takes that smart data and smart decisions and is able to autonomously implement it. I tend to kind of take the same definition when it comes to banking and finance also. A very critical part of enabling that smart city is payments, cashless city. Talk about any smart or cognitive city, one of the agenda that they'll have would be a cashless city. So, not as in poor cashless city, but as in cashless city. I think we are taking that agenda wrong and we're talking about the poor city when I come to Karachi every time. I'm sorry to see that. But anyhow, so with that background, I wanted to discuss a few things. We'll talk about some digital payment trends across the world, open finance and the future of digital payments. We want to look at the objective is to go cashless. Globally, we are seeing cash is king. There's out of 9.46 trillion transactions of digital payments. We are seeing growth of 11.8%. Digital commerce holding the largest part of this. Very important number that digital payments, and I'm not going to preach to you guys, but this is something which is a phenomena that have to be looked at. But even today, some of the discussions that I was having with people, something interesting, when we started looking at Dubai, why we wanted digital payment, of course, one social agenda is always there, that there is financial inclusion and digital payment will help in financial inclusion. Dubai, a city of 4+ million, had about 500,000 underbanked people, population. So it was very interesting when I saw Dubai in 2016 and found that 500,000 out of the 4.5 some million population is underbanked. So certainly when I look at digital payment, that becomes one of the agenda items. But realistically in 2016, 8% of Dubai's total transaction was was digital. It should have been the other way around. Globally it was the other way around. So that was something which was very interesting when we saw that 8% was there. The other thing people used to say that why do we want to go digital, because those damn card schemes, they are skimming everyone, they are milking everyone, and they are charging a huge interchange. When we looked at it, that was not the case. Interchange was, the scheme was getting less than 2%. The issuer, less than 1% rather, sorry. And it was the issuer who was taking the most amount. Me as a consumer have no issues, whatever is being charged. The retailer wants that, the retailer may have that issue if the price is higher, The scheme was telling the issuer of there's a cap there what you can charge. But the issuers found a way around it because that cap is for vanilla cards. If it is a premium card, they want to give me a golf course, free golf every day, or my airport lounges. So now it becomes a premium card. Now the scheme cannot, the issuer cannot, the scheme cannot dictate it. So, but even then it was around 4%. That's what they were charging, the total cost. But when we looked at the cost of cash in Dubai, that cost was about 6% to the ecosystem. I have no idea what that cost is to the ecosystem here. So certainly that was not a check. That was not one of the reasons where the ecosystem was after digital payments. So these were some very interesting numbers, which were my misconceptions before I started looking at it. And today I had multiple conversations, and the same misconceptions were there. So when I look at something like Rust, when I look at something like a real-time payment platform, I am basically not looking at costs as the card interchange is very high. So that is why I am basically wanting to bring in something that will not have that cost. That is certainly not the case. The real-time payment otherwise is a phenomenon that's very important. UAE to me was doing it all wrong for quite some time. We kept on working on, or not we, but rather UAE kept on working on what you call is digital wallets, which are stored value wallets, and we kept on failing. I mean, the banking ecosystem got together, a consortium was created called UAE Digital Wallet, kept on failing a couple of times, then they renamed it as Clip, launched it, no takers. Zero. I mean, adoption is minimal. Etisalat, as a telecom incumbent, they came up with their wallet, Etisalat. I think it's called Etisalat Digital Wallet. Again, I have never heard of it, never used it. You find a few stored value wallets that are here and there, but it's minimal. Few D banks. They are there, they have resonated much better to the Gen Z and to the youngsters. So you have more adopters of these D banks than of the digital wallets in UAE. A very interesting phenomenon. I'm just throwing some things here for conversation later on. So this is something that was very interesting. And to me, I believe it's a big crime that if in 2023 you are going to launch a stored value digital wallet for real-time P2P payments or for real-time payments, when you can have real-time payment platform like Rust. So I think that's something which we're going to look at it. Certainly where most of these have failed is the user experience, as we were discussing in the earlier discussion also. I want that experience to be as seamless as I am sending you money by WhatsApp. You are competing against cash for that experience, right? We talk about a youngster. My daughter hates going to the bank maybe more than she hates going to a dentist. I mean, she would never want to go to a bank. So it's the experience that is basically what we should be looking at. Anyhow, we are seeing that cashless payments in different economies. This is the growth from 2017 to 21 actually. And very interestingly, India and China, the adoption is phenomenal. We're talking about 200 to 300% growth over the last 4 years, which is natural that there were more cashless payments in these other economies. But certainly now it's that paradigm shift that is happening. UAE also, from 2016 where we were at 8%, the numbers are much significantly higher. I don't have the exact numbers. So when I see some key trends in digital payments, you are seeing certainly contactless payments rising. Full payments is another area where, at least now in UAE, there is some movement. Cross-border payments is something very interesting to everyone. Very variable recurring payments, which is almost like full payments. A lot of focus on P2P payments. BNPL and the whole ecosystem around it that has become big, and then of course open banking and open finance. these are some of the things that I'm going to talk about. I think I don't need to be talking to you guys about contactless payments, so let's move forward. When we talk about BNPL, it's certainly a major driver right now. BNPL market size is projected at 3.68 trillion by 2030. CAGR 45. Pretty much any analyst you are going to see, they will be very bullish on BNPL, and this could be. Let's move forward. Drivers being, of course, e-commerce, younger generation leading the adoption, growth of alternate lending. Like in Pakistan, UAE has a similar situation where lending to SMEs, lending to smaller individual customers is very restrictive. I would say they are very conservative in their lending approaches, and you see a similar thing in Pakistan. For the benefit, of course, one of the things that these BNPL players are looking at is not just the revenue that they are generating because these are payments which are non-interest payments, mostly BNPL. So where is the value coming to them? The value is coming from the data and insights. That's the whole idea. How can they capitalize, these BN players capitalize on that data and the insights? That's going to be the biggest part. The next is how they can create stickiness by customer loyalty and create recurring sales. These are some of the areas where they focus on. Of course, the challenges being risk of defaults and difficult access to credit risk. But I'm seeing these are the trends when it comes to BNPL. Currently, I think these numbers are from last year. So between 2019 and between 23 and 24, the numbers were doubling in pretty much all economies. The projections. We are looking at the overall growth is between 2020 and 2024 it was doubling. In 2024 that seems to be 4.2% of the total market size. That's what is projected. The other area which we are seeing is cross-border payments, instant payments where funds are settled in less than 10 seconds are expected to account for 9.3% of all B2B transaction volume in 2022. That's one of the research. Cross-border transaction grew from 29 trillion in 2019 to 39 trillion in 2022 as per JP Morgan. So this is again another trend which as central bank should be looking at. Distributed DLT platforms, not really blockchain platforms, but truly distributed ledger platforms are the enabler when it comes to these cross-border payments. Certainly most of the initiatives that we have seen in cross-border payments in UAE are with, between the central banks. UAE and Saudi had a pilot a couple of years back with central bank digital currency on that. Okay. And peer-to-peer payments, the global peer-to-peer payment market forecast is to reach by about, I think it's 9.1 trillion by 2030. And we all understand that adoption of mobile and social platforms are the drivers. Payment with social media platforms, peer-to-peer payments using social media platforms. I think that's one of the phenomena that is going to come that you'll see a lot. Example being the whole WeChat ecosystem in China, where a lot of peer-to-peer payments are happening, merchant payments are happening on that. So when we look at RAST, we should be looking at the rise of the super apps and how RAST is going to support peer-to-peer payments or merchant payments in that ecosystem. Mobile P2P payments this year in US was 122 million, projected to be 190 million by 2027. So with that, I was And one of the things when we were looking at, we surveyed a lot of countries in the world when we were looking at what Dubai should do or what UAE should do. And one of the things that we were looking at was that peer-to-peer should always stay free of cost, because that's what's going to get you the market. And money should be made in transactions with merchants, with your QR code payments, but P2P should always be free of cost. Now, certainly the next thing we're talking about is open banking. That was the agenda of discussion today. Open banking would allow financial service providers to create innovative offerings, more efficient payments as we see it. Any analyst you see today is very bullish about open banking. McKinsey is predicting open banking can add up to 1.5% to the GDP of EU, UK, and the US. Global open banking market is valued at 12 billion in 2020 and projected to grow to 68.75 billion by 2028. And the whole idea is that you provide third-party service providers open access to consumer banking transactions and other financial data from banking APIs. There was a reason I initially discussed my background with cities and smart cities. So, the services, the cities of the future, it's not that the government or one entity is going to create these services. There's the whole concept of a citizen developer. A smart city is only possible when the whole ecosystem co-creates services. Citizen developer comes into that. You open up the city's APIs and city's data, supported by the right protections for the citizens, and that becomes the key enabler for these smart cities. Similarly, when we talk about finance and banking, these services are not to be created by the banks only. It's not possible. The ecosystem has to co-create these services, and for that, opening up the APIs and opening up data is very important. So that's a major disruption that the banking sector and the finance sector is going to see, or is seeing rather. So in traditional banking, you have a bank and going an app, and customer is basically accessing an app and service that is provided by the banks. In an open banking framework, customers are looking at multiple apps which are then integrated with your open banking platforms, and banks are exposing their APIs and data for that purpose. So, as I said, there is what is involved in this case is your payment network, the bank holding the account, the lending capabilities, the fintechs, payment service providers, and the regulators. Some of the use cases could be bank account aggregation. I, as a business, have a certain bank account held at different banks. How do I aggregate the view of those banks, my holdings in those banks? Personal finance management, transaction tracking, personal recommendations, debt advisories, product comparison. These are some of the initial use cases that we are seeing from open banking. It's basically shifting the control of personal data from banks to the customers. Customers gain financial freedom and power over their data. Banks and fintechs would basically develop new innovative offerings. I personally am a firm believer that data is owned by who generates it by the citizen, not who is holding that data. So if the bank is holding my data or the city is holding my data, they are the custodians, I am the owner of that data. And the use of that data should be done with my consent. So a framework has to be in place. And that's why I'm a big supporter of or proponent of a digital identity ecosystem, which is very important in a jurisdiction, because side effect of having a robust digital identity is that you also have a mechanism for providing consent. I have my data held by anyone. This digital identity provides a framework for even providing consent for sharing of that data. So in the open banking ecosystem, you have third-party providers, you have banks and payment service providers would hold customer data and is required to enable third-party providers to retrieve such data through API. So that would be your banks and payment institutions. You have the technical service providers who would connect holders and third-party providers, enabling data sharing using their open banking platforms and fintechs. That is going to be here. And then you have the third-party payment providers, third-party providers. These provide account information and payment initiation by accessing customer data held by data holders. And there are two types of these ISPs. One is the account ISP, which is only holding information, and the other is the payment, which is initiating the payment. So when a regulator is looking at this, regulator is going to look at them separately, because an AISP is not initiating a payment transaction. However, that's where most of the innovation is. They actually hold the data. How do they benefit from that data? That's where innovation comes in. And I always wanted to answer a question that was put to you, that should a bank be supporting these, or should a bank be competing with these fintechs? So I say the bank wants to compete, good luck. I mean, if the bank would have done it, bank would have done it before. So good luck if the bank is wanting to do that. They're going to not only destroy themselves, but the entire ecosystem. So I'm very have a very strong opinion about it, with excuse to one of the bankers. So as I was saying that, in this ecosystem, an AISP users information is collected, and the data is collected from the banks, aggregated. AISP then uses that information. In case of a PISP, the PISP can initiate a payment transaction from a merchant, which an AISP cannot be doing. So we basically, with an open banking ecosystem, what others have seen benefits is the customer experience has become very delightful, much better customer experience. You have new models that are being created of data analytics and benefiting from that. Banks basically then interoperate with other banks. The whole ecosystem can compete for providing services to that customer. Now, another thing we all understand is that networks, the power of networks is there. 1 + 1 becomes 11 in a way. It is not that if I'm bringing my customer to the ecosystem, I'm losing my customer to others. I'm also gaining the customers from others. So that was one of the foundation issue of when we actually were lobbying for KYC in UAE also, and in Bahrain, and then it happens here also, that a bank will say, hey, why do I put my customer in this KYC network? Because I'm going to lose that, and that's my asset. On the other hand, you're also gaining that from others, and it also provides a way of monetizing from the data and the effort that you have done in generating the KYC for that customer. So we are seeing the banks have been using open bank, integrated open banking with the core banking solutions. Some banks have a different approach on this. Market size and industry perspective. Global open banking market is projected for 2026 as 43.15 billion. This is a survey from the World Economic Forum. 29% respondents, which were the bankers, favor open banking initiatives. 45% respondents express a desire for banks to become digital ecosystems with open banking as a critical component. I used to always hear that D banks are coming and neo banks are coming, and banks should innovate or they are going to die. So I guess the same threat now, that banks should innovate and adopt, otherwise the future is bleak for the banks. Some of the emerging markets, UK of course was the first country to adopt open banking. EU has a structured legislative framework adopted since 2019, I think PSD2. US, on the fintech side, US has a market-driven approach though with open banking. They have the most innovation there. Bahrain became the first GCC country that launched their first open banking framework in the region. UAE, as I'm not privy to it, but I have heard that UAE is in the process of releasing an open finance framework. India introduced, along with UPI, India has defined a standard for open banking. And I can share these details later on, but those were the important ones. Then comes a very interesting payment mechanism called variable recurrent payments. I want to use open banking to add a layer of data intelligence to online bank account transaction. VRP introduced the ability to find out a right way if there's enough funds in an account for that transaction to happen. So it's basically another instrument of allowing post-pay transaction with a legal cover. This bit I wanted to introduce an effort that recently went live in UAE, which was the UAE direct debit. My friend Umair, I think he's here. Umair, sir, are you here?
He's in the next room.
Oh, he's in the next room, I see. He was the person behind enabling this in the UAE Central Bank, with the UAE Central Bank. And the whole idea is it's an instrument like a check, which I can use as a postpaid instrument with guarantees. And there are proper rules that governs when I can cancel, when I cannot cancel. So for those of you who are aware of or maybe have lived in Dubai, that's probably one of the only economy that I've seen in the world where when I go and rent an apartment, I have to give post-dated checks for the entire year. I have never seen that anywhere else in the world, so they need to have that guarantee. Now that check used to have for that matter, it used to be a criminal offense until 2 years ago. So that the check gets bounced, I go to jail in a way. But they wanted that guarantee and assurance. And that was one of the biggest friction that we had in UAE. So I was leading one of the initiatives where we wanted to take the entire real estate journey, rental journey, and make it completely paperless and frictionless. So the biggest friction was I can look at the apartment online, I can do the contracts, everything online, but now I have to go there to deliver those checks. That was the biggest friction in that whole journey. So we were lobbying for quite some time to actually launch a direct debit DDS system, which Central Bank actually enabled, and they just got their license maybe a month or two ago, where it has gone live. It was something that was going on for 4 years. So the central bankers here should not be concerned. I mean, UAE also took 4 years to do that. We'll just skip this. So some of the, get this. So it's looking at some of the payment trends across the world, but let me skip some of that. Then comes open finance. So open finance goes beyond banking, extending access and sharing of consumer data to various financial products and services. This include loans, consumer credit, investments, pensions, integration with non-financial industries. So it's a much bigger ecosystem. It enables everyone to access and act on the financial data to make intelligent decisions, build personalized money experiences, enable new business models, support financial wellness. One of the biggest pains, I was very glad when I started interacting with State Bank here, because one of the fundamental objectives whenever I used to talk to anyone at State Bank was the financial wellness of the people, to protect the consumer. And in UAE, I actually felt, I'm not talking as an official, but as a resident there, I felt that didn't exist. Rather, I was, the banks were being hawkish, and the ecosystem was not protecting the consumers and mitigate fraud and risk. I should not say more, I have to go back to UAE also. To boost the economy from, and the projection was that this, actually let's go forward just a second, sorry. So some of the use cases integrate with non-financial industries. It could be healthcare sector. Open finance would enable better patient financing options, as an example. Enhance investment opportunities. Open finance can provide consumers with access to broader range of investment options and investment management services. improve credit and lending services, because the next, and on the regulatory implications, we were looking at, the regulator is going to actually drive competition, boost confidence, and support economic growth. But they're increasingly recognizing the potential of open banking and see it as a mean to promote competition and enhance consumer protection. We basically are looking at the move from open banking, which is for payments and data savings, to open finance, and then to open data, which is all of your other data also. So frameworks are being developed to support this. As we're saying that open banking is just the beginning of it, open finance is going to go beyond payment accounts, mortgages, savings, pensions, credit and insurance. Let me just, so some of the examples for consumers, let's see, sorry. So you have increased access to consumer financial products, empowering customers to make informed financial decisions, let the service providers compete to get the business from the consumer, easier comparison of prices and product features, access to advice and support in decision making, and boosting access to commercial lending. I would then look at the benefits from consumer. It is things like automatic transfers, more personalization, more visibility, better financial management. Financial institution can lend quicker and more efficiently, enable a more secure way of institution to allow consumers to secure their data. Fintechs has more sources of data available, and they're going to gain a broader and more accurate basis upon which to create consumer-centered financial technologies. A good friend of mine, Dave Steyer, used to be at MIT, now at Oxford. He has a very interesting startup. This is based on behavioral biometrics. So basically, the hypothesis is that a consumer, when is not financially in a bad situation or distressed, would spend close to home, would basically have the same habits. I love drinking coffee at this XY Medan hotel next to my house. I will go and keep on doing that. When I'm financially distressed, I'm going to now go out and do something else. And it was amazing. They have created a model around it. The startup has done this, where it's a model based on behavioral biometrics, and it's a credit scoring model for giving instant credit. So that's one of. So you come up with very interesting models that would be there. Of course, there would be a resistance to change and misinformation. You have to look at removing the human element and building a purely digital brand around it. I wanted to discuss some of the regulatory approaches. US, China, Australia, they have more of a market-driven approach. They have no explicit rules or guidance, but just some kind of recommendations. Countries like Malaysia, Japan, Korea, India, Hong Kong, they have more of a facilitative approach, provide guidance and recommend standards along with open API standards and technical specifications. And then there are countries which have more prescriptive approach, which includes UK, Australia. EU has a very prescriptive approach, Brazil, Saudi Arabia, Bahrain, which require banks to share customer permission data and require third parties to register with a particular regulatory and supervisory authority. So that's the current state. As I was saying, open banking is focused on payments. Then there is the whole ecosystem of open finance, which include asset management, wealth management, unsecured lending, etc. And then open data, which brings in telco, utility, healthcare, retail, and other data. And collectively, this creates an amazing consumer experience. Let's skip that. One interesting thing which I saw today, I was reading State Bank's report, was that in last year, your cash transactions reduced by 1%, but the cash volume increased by 25%, right? So that was, as I was seeing in the report. So certainly that's an area where digital payments have to grow rather than cash. Skip this. So when we are looking at the future of digital payments and navigating towards the cashless society, we have to look at number one, open API and open banking, standardized payment regulations that would support that. But then some of the new payments that you'll see more of IoT payments. As I was saying, super app is a phenomena not to ignore, and the whole payments ecosystem around super apps. And then it's the rise of the platforms. I'm going to discuss a couple of them, AI and blockchain enabled platforms, and you'll see CBDC, and not to ignore decentralized finance around it. This is a snapshot from your PBS KYC platform, which basically is KYC between the banks, consumer sharing bank sharing KYC information. Why blockchain? But now, if you have this national eKYC, which remove inefficiencies in interbank communication with trust, you can, the next thing, on the same platform or similar platforms, you can do things like an artifact exchange between the banks, digital check clearing, a trade platform. On an artifact exchange, for example, when in Dubai we had a mandate in Dubai government that by December 2021, we wanted Dubai to be a completely paperless government city. So by that they meant that government of Dubai will never not issue or accept any piece of paper after 12 December 21. That was the guideline. And of course, we achieved that. One of the biggest hindrance was banks, because we do interface as government interacted a lot with the banks. And banks had about 400 types of documents, artifacts which banks exchange amongst themselves, 3-party or 4-party. And the volume was 50,000 a day. So that's 50,000 a day, so that was around 6 billion, I believe, per annum, per month. These are things like a no liability letter, your bank guarantee, and so on and so forth. So why exchange this in paper and be prone to fraud when you have a platform like this, to use the platform to exchange the same artifacts amongst the banks? Etisalat in UAE has launched invoice financing platform. So a same platform could be used for invoice financing. Now imagine you have a blockchain platform, you have the banks connected to it, you have your trade network, the nodes or the stakeholders of your trade transaction connected to it. Now, I as a consumer benefit, because what if now I say, instead of me going to a bank and asking that bank to finance my trade transaction, what if the banks compete for that trade transaction? Everybody in the ecosystem benefits. And if I allow the banks to compete for that transaction, why can't I allow the crowd to actually compete for that transaction also? So, that's how the ecosystem will evolve. So some examples we were giving from other such platforms in the region. There is the UAE Trade Connect or National KYC in Bahrain, Bank Trust Network that we launched in UAE, but that's something that has not gone live yet. And in Qatar, there's the bank chain in India, ESAL in Saudi Arabia, and the reconciliation and settlement platform in Dubai government. Now I want to talk about super apps. Just 3 slides I added for super apps. And this is the biggest phenomena that we are seeing in other economies. Day of a WeChat user wakes up at 7, check moments, which is his Facebook, go to work, pays, makes a payment using WeChat, from WeChat, takes a break, checks his moments, messaging again on WeChat, post lunch rest, does online shopping on the WeChat ecosystem, 9 million mini programs on that ecosystem, returns home, order food, pays through WeChat, reads an article, again pays through WeChat, and so on and so forth. So from morning till night, basically he is a consumer of WeChat, of that super app. Now this is the extreme example, and there are so many touch points of payments in that. So, and this is, if you have an open payment ecosystem, open finance ecosystem. Integrate with the super app. My daughter wants to actually, buy for the game also. She wants to buy a, I don't know, different cloak or something for her character. All of that transaction is happening using it. So, and this is reality. This is happening now. The super apps are, you'll see in the next couple of years that it would be rise of these super apps that would be there. And if the banking sector is not ready, if your payment sector is not ready, you're going to lose a significant amount of that business. And that the only option left in Pakistan would be right now credit card payments. So that is something that have to be looked at. This, you cannot stop this phenomenon from coming, right? Just WeChat itself, I'm a big fan of WeChat. That shows 1.26 billion active users, 38 billion messages exchanged daily, 20 million official accounts. But the very important part is 70 million, this is zero is wrong, 7 million mini programs. These are those apps that are there. There's 7 million mini programs that are in the ecosystem right now. And, again, this is the core part, which is the communication, sharing, and social, but then all of these so many apps of shopping and all of the other mini apps that are going to be there. 7.2 million mini programs, they call. So if I have a McDonald's mini program, I'm just ordering a burger, I need to do that. The payment, my profile, everything is what we said what the super app provides. That's pretty much it. Some of the numbers which we are always very worried about: low financial inclusion, Pakistan being at a very low number, support as opposed to South Asian and Southeast Asian economies. This is something that we have to be worried about for sure. And same goes with borrowing, which is for non-large account consumers, which is again at a very low number. Key takeaways: CX, CX, CX. That's the biggest part. Your competition is with cash. The experience of the user experience has to beat cash. It's there, it's right there, it has trust in it. The transaction happens right away. I give you money, it is in your possession, you own it. There is trust in it, it is going to be accepted. So that's something that you have to look at. As I said, my daughter hates going to the bank more than she is going to the dentist. She doesn't want to go to the bank, even if I wanted to go do something. The other is rise of super apps. This is something that you have to be ready for. The rise of the platforms, integrate with those platforms. Focus on the digital immune system. We're not only talking about security anymore. In the earlier sessions today, they discussed about security, privacy. So, collectively, that is the digital immune system that you have to be looking at when you're looking at payments. And open finance, empowered by open data and open APIs, citizen developers, and ecosystem would co-create the services. I believe that's where we are headed. So, thank you. Sorry, I was a bit disconnected. I put a lot of slides over here and there, so they were disconnected.